Another week, another trading cycles video. Can you believe it? We are now in the week 23 of the year 2023. My name is Eric, and before we continue here and hand everything over to Urmus, I just want to mention and remind you guys that keep this in mind. We do not provide financial advice. All the content that we share is intended for educational purposes only, and always trade the price and not the prediction. What's going on, Urmus?
Hello. Yes, well, as you can see, it has been a very good market lately. So the market has been rising and very strongly indeed. Yeah. Obviously, there are a couple of reasons why it happened. We did know that in advance because of our research here, and obviously that was already predicted quite a long time ago that it might happen. Obviously, there is no certainties. We always deal with probabilities, predicting the markets, but these tend to be quite accurate. So yeah, there is some logic and truth behind them. So the reason for the market rally, obviously, now that we know the reasons, obviously, the US job market has been very strong. We have still I think the lowest unemployment rates in some decades. Yeah, so it is very strong market area, and also the debt ceiling issue or crisis was solved last week. So yeah, it did pass Senate, and President Biden has now signed it, I think, as well. So that's all sorted. So US is not gonna default this time, at least. And also what we are looking forward to at the moment is that another Fed meeting is coming up in June, and I think the next rate decision should be on Wednesday, the 14th of June. Yeah. So our cyclical analysis does kind of suggest that the markets will decline from here on. Yeah, and there are some fears in regards that the next decision there as well. Obviously, we do hope that Fed might stop raising rates, or at least it will be stabilized at some point, hopefully in the next meeting. But yeah, the risk is still there, so we don't know how they're gonna act based on the low unemployment numbers there. Yeah. So as we know, they have been trying to break that market and get some unemployment numbers coming up, so that the economy might get back on track after that. But yeah, still the economy tends to be quite strong even after those rate hikes there. And also, what is good sign is that the actual inflation has been coming down. So it's not looking too bad anymore, at least in the US. In Europe, the situation is completely different. It's not so rosy everywhere else, although it is stabilizing as well. But the numbers are a lot higher than in US. So what else is there? Let me see. Yeah, basically, let's have a bit wider look here. What I wanted to show that obviously, although everything seems to be kind of under control, and market has been rising since October last year, if you look at the big picture, it's not looking so bright at all. Obviously, we are quite far off from the highs back in the beginning of 2022. Yeah. As you can see from here on Fibonacci numbers, it's actually at a very important level now. It's 0.618, yeah, which is quite important resistance at the moment, and we do expect that market might turn from here, yeah, as it has been reached that level now. So that's something to bear in mind. And also, if we look even wider picture there, something like that, yeah. Just remember that that picture, and I'm going to show another one here. So if you look at this diagram here, so basically we should be in here where I'm pointing at the moment with the mouse here, yeah. And there is a scenario that we might be in bull trap scenario at the moment. If that should happen, we might see quite a lot of decline on the market still coming up in the second half of the year and possibly into 2024 as well. So obviously, hopefully it won't happen, but there is that risk. So that's called bull trap scenario, yeah. And in the history, it has been repeating quite regularly, and the pattern is always the same. So we are in that scenario, and I've been keeping that obviously in mind since the beginning of the year when I kind of discovered this pattern there, and it does look since the rally from October till now has been very weak actually. Yeah, it hasn't been strong enough. It kind of still supports that bull trap scenario there. Yeah, okay. So unfortunately, that's something to bear in mind as well. So obviously, we do hope for the best, but there's those risks always, and we do deal with probabilities, not any certainties here, yeah. Let's look at the oil market as well. So US oil is or has been quite quite weak lately, yeah. And if we look at the bigger picture, obviously the highs were back in 2022, just shortly after the war started, and in June 2022. And since then, the market has been declining. But now we do expect that oil prices might start rising again at some point. Yeah, so there's coming up another bullish period as well seasonally. So that's something to bear in mind. And also there's OPEC meeting this week coming up as well. So there might be some important news coming out in regards. Now, gold did rally quite good last week, but on Friday it did drop down again quite significantly. But still, we are in another bullish period. Yeah. The next bearish one is coming up somewhere in the middle of June, starting from the 19th at least. Although the next turning point is at 26th, so yeah, that's somewhere there the market might turn, yeah, at least according to these indicators here. And Bitcoin, as we have already discussed, has been in decline since there is quite strong pressure for prices to fall, and that has been confirmed again today, where the prices fell quite significantly in one day. So that scenario still keeps holding true, and yeah, it goes down to 30th of June here at the moment. So we'll see how it plays out. But yeah, nothing good at the moment for cryptos. So yeah, and obviously 50-day moving average is now on the rise again since that strong rally took place last week. Yield curve is still inverted. No news there. Obviously, yield curve has been quite good predictor as well for market declines coming after that phenomena has happened. So that's another topic that supports that bull trap scenario again. So obviously those signs are there, yeah. And now VIX index is seeing its quite important lows, obviously. When we look at the bigger picture here, it has been that low as it has been now in the past couple of days, not very often. So these lows were touched last in the summer of 21, 2 years ago. So, and when it tends to happen that VIX goes that low, there quite usually happens to be a turning point on the market. So yeah, that's another sign that markets might be turning quite soon. Okay, so yeah, that's about it, I think. Just in regards to a broad overview of the market. So this week I expect that the markets will be still volatile and even more volatile starting from the next week. So bear that in mind as well. The 12th seems to be a very important turning point as well. So yeah, let's see how it plays out then. All right.
All right. Thank you very much, Urmas. And thank you for watching and listening. As always, if you haven't already, click the subscribe button. What are you doing? Click that bell notification icon as well so you get notified when we upload next. By the way, that's like weekly because we do this, every week. And if you have any ideas, any comments, any recommendations, or you just want somewhere to share your feelings, that all goes in the comment section. So leave a comment down below and share this video. Share it with anyone you feel like might find it useful. Maybe you're the cashier at your local shop, or if you go to a restaurant, they give you the receipt for the bill. Maybe on the back of that you can kind of write the full YouTube video URL. If you can do that, that would be amazing. But yeah, share this video, share our channel, spread the word, and we shall see you in the next video. Have a good one.
Have a good week. All the best to you. Bye-bye.
Bye.